Good morning, everyone. I hope you guys are doing well. It's me, Adnan Rahman. I'm the market analyst for Errante. And early in the morning, we had this RBA interest rate decision. And as expected, the decision was in a hold type of scenario. Okay. And there was some forward guidance described. Let's have a brief view of that, of what were the wordings used by the RBA. Okay. So let me show you on the 12th of August, the last month, the RBA had cut rates to 3.6%, okay, as expected, but surprised markets by lowering the economic forecast, okay, and that was something that really had a problem for the Australian dollar because the economic forecast was lowered. And what was this forecast comprising of? Okay, of easing inflation, okay, and softer jobs. Now keep this easing inflation stuff in your mind because now there has been a shift in this element. Okay, the job market is same, there are issues with that. Okay, and then their typical language what they use, that we are data dependent, and then the global uncertainty prevails. Okay, this is what were their views on the August of 12th. Besides that, now on 30th of September, I mean today, in the morning they had this, rate stable on 3.60%, and then they warned, okay, that the Q3 inflation may exceed expectations. Okay, earlier on the August 12, what they said was that they see easing expectations of inflation. Okay, and now what they are saying is that expectations may increase. Okay, so when the CPI increases, then directly or indirectly it gets the bullish type of picture for the currency. Okay, and then market cuts odds for the November cuts because of this, expectations of high inflation. The odds of November cut were like cut down. Okay, and then AUD surged on this news. This is what happened with the AUD. Now let's see what do we have over here. Okay, this information is the same one. You can discard this, or you can take a screenshot if you want for your reference. Okay, for the reference purpose, I'll be adding this accordion type of stuff over here, by which you can have a detailed view of what happened in the history. Okay, so you can easily have a brief view. So this area over here, you can omit this, you can take screenshots of this one, it's totally up to you. So what happened now is that the rates were stable, and on the April meeting they have assigned 3.35% as their terminal rate. Okay, terminal rate. What is terminal rate? It's a rate in which the demand and supply matches, and they are okay to keep it at that particular percentage. Okay, so this is what they are expecting. It's 3.35%, and you can see the market may go and hit this level in the later on, but now the inflation picture has moved towards the upside. So this November cut, okay, the November cut on 4 is just like like a shaky right now, all because of this insurgent inflation expectation. Okay, so keep this in mind. The terminal rate is 3.35, and now let's move to the charts and see what do we have. Just before going to the charts, let's look at the currency meter. For now, the AUD stands at 29%, or the strength or the score of AUD is 29. This is the score based on the fundamentals. All the fundamentals are indexed, and then this number is calculated. Okay, so let's see what currencies can you pair this. I mean, AUD is now having a fundamental strength in terms of a forward guidance, inflation, higher expectations. Okay, so you can couple this with the weaker ones. Okay, the weaker ones right now, like the Swissy, that's 33, or the New Zealand dollar, it's on 25, and especially the euro. Okay, so you can make the pair of this one, like euro AUD or AUD NZD. Okay, this is what we can see right now. So let's go on the chart and have a look of what happened with the AUD USD. This is the day that started over here at 2 p.m. my time. Okay, and for the broker, it's like 00. So the day started over here, the market rallied and it went up, and then it has come down to take liquidity grabbing over here. And this is what I teach to all of my students in the webinars everywhere, that the open price is the best place for you after a movement to buy or sell. Like, see, this was the open price, the market went up, it played its game, it has done all the liquidity, manipulation, whatever you name it. So again, the entry point is this one, okay, the open price, the retest of open price. In the same manner, if we were in a shorter position, the market was moving towards the downside, you should have let it go down, and then if there was a test of the open price again, you could have gone short. It gives you that some sort of ABCD pattern. Here's what I'm talking about. Like, see, this was the open price, the market rallied up, okay, and then it came down at this open price. So this is the price where you can take your bullish entry. Okay, the same thing goes over here, that if the market was moving downwards and then you needed a test of the open price, and then you could come downwards and take a bearish or a sell position on this one. Okay, same goes for this AUD on the day one, and then we can look at the weekly candle. So for the weekly candle, this is your price over here. And if now there is a strength in the USD, because we have that we have just 2 days remaining, I think, for the government shutdown and making their decisions. So now if we have a strength in the USD, this part over here, okay, might be a good place to again go long into this in this movement towards the upside, okay, and gather these fundamentals. So now let's see what other options do we have. Like, let's move to the Euro AUD. Okay, the same story with the euro that I was just explaining you right now, is that, see, this was the open price. This was the open price, the market went down and then it went up to test this open price over here. As soon as there was a test, this whole area over here was your liquidity grabbing, okay, and then the market has moved towards the downside, okay. See this over here near the lows. So now this is the easiest way you can trade. And one more thing, there are multiple confirmations. For example, like if you can have a view over here, that your weekly candle, it opened at this price. Okay, so this candle over here, this high was not only the liquidity grabbing, it was a test of this level itself, of this open price itself. So, again, the same thing, like as I told you earlier, the test of the weekly candle, okay, boom, over here. So this was a multiple confirmation place. You had this liquidity grabbing of the daily candle, and you were in the open price of the weekly candle as well. So this is the game, or this is the process how you can make your leveling, and this is the most easiest process. Because in these type of strategies, the most important thing is that you must know what the other candles are doing. So traditionally, what options do you have is like you just go on the daily chart and draw a line from here and all that stuff. I personally don't like that, and I can't even do that. It's too hard. Okay, so that's why I've developed this one, this software. If anyone wants it, it's totally free of cost. It's not for sale. It's a free of cost version only for Errante clients. Okay, I repeat, only for Errante clients. Okay, so there is no cost. No one will ever charge you. If anyone is charging, that it's not good. Okay, it's not us. Okay, so this is totally free of cost for Errante. All you need to do is just drop me a message with your Errante number, and then I will give you the copy. Okay, so the first one was Euro AUD. Now let's move to like AUD Swissy was what we were looking, right? Okay, the same thing over here. See, this is an educational video plus a technical setup video as well. See, the market opened from here, it went up, okay, then it came down, okay, over here into this open price. This was the open price. Then we had this liquidity grabbing over here, okay, and soon after that grabbing, the market went towards the upside. Okay, same easiest and simplest way to do. I mean, when just keep in your mind, if this is your open price, just let me show you. For example, if this is your open price, okay, and the market was in an upward movement, and then you see it coming down, and you have this um, grab. Usually grab means a wick, okay, some sort of wick, and then you see the market getting back again. Now this area over here is something you can call as your grabbing, and that is a place where you can go into an enter position. Okay, so obviously you will not be waiting for the market to go towards the upside. If you have any movement towards the down of the open price, that is your place. Okay, if you have a wick form, that is your place to go. I have explained this in detail in the webinars. Okay, so now I'll be back with the other analysis of what happened with the euro. Just let me give you a view of what happened. Okay, this is what we'll be understanding right now in the euro in the upcoming video and post as well. Okay, the Euro CPI, and especially today we had this French CPI, and now we are expecting to have this German CPI. Once all of this is out, then we can come to a conclusion of where the Eurozone CPI stands. Okay, have a good day. Thank you.